Hey traders, Raghi here. Let's get into the December game plan. We're going to jump right into it. And I'm going to bring in a view of the indices, the NASDAQ, the S&P, and the Dow, that when I bring it into view, it might seem a little busy, but I'll walk through what it is that I do with this layout. This is a flexible grid within Thinkorswim. And this is just a flexible grid where in the upper left-hand corner, I've got the NASDAQ. I'll do the Dow and the S&P as well. And then I put in the top 11 names. Now, these top 11 names are not going to be a brand new set of 11 names. Sometimes they'll shuffle around in order a little bit, but for the most part, they're really steady. And the order in which I list them is the order in which they're weighted, which reminds us of the simple fact that the S&P, the NASDAQ, and the Dow are high concentration weighted indices. That means a very small number of stocks have a disproportionate influence on what the index is going to do. Now, here's the NASDAQ. This is where I'm most bullish. Now, when you take a look at the stocks here, you can see why it's so strong. Apple, Microsoft, Amazon, Nvidia, Meta, and AVGO are all green, and those top 6 have the most weighting. Google, Goog, and Tesla don't have a trend. Now, that doesn't mean they're weak per se, but if I'm thinking about the probabilistic movement of higher highs and higher lows, Apple, Microsoft, Amazon, Nvidia, Meta, AVGO, Adobe, Costco have better probabilities for follow through. And that's exactly what we play. Again, what I'm showing you is, if you look at the double green, that's what made 2020 so good. So while we may not have the buy everything markets of 2020, while we may not have an accommodative Federal Reserve yet, we'll talk about that today too, we do have glimpses of uptrends where index sector stock is in play. And when we have that kind of cohesion, that kind of alignment, let me show you what I mean. Let's look at Apple and Microsoft, number 1 and 2 in the NAS. And then I'm going to jump on down to the XLK. This is the number 1 weighted sector in the NASDAQ and the number 1 weighted sector in the S&P. And this is where Apple and Microsoft are the top 2 by a landslide weighted names here. XLK goes where Apple and Microsoft go, right? So by high concentration weighting, you might think, Rog, what does that exactly mean? Well, of all the stocks in the XLK, which is once again a tech ETF, of all the names in it, Apple and Microsoft, amongst the holdings, account for over, I believe, 47%. So nearly half of this sector that has many stocks in it, right? These are just the top 11. Many stocks within it. This is 47%. So half of this sector is here. Now, the best way to trade XLK is in the same direction the NASDAQ's going. And the best way to trade Apple and Microsoft is in the same direction that the XLK is going. So that's index sector stock. What don't I want to buy? I don't want to buy Cisco, right? Easy to pluck out where we don't want to be bullish. Yes? All right, now let's use another example. Financials. I've been talking a lot about why once financials start to trade bullishly, very reminiscent of XLK, right? The sector's moving higher, the top weighted stocks are moving higher. When it starts doing that, who does it disproportionately benefit? Typically the S&P and the Dow. The Dow is not going to benefit in the same way right now because healthcare and energy are not moving higher. So financials are going to help the S&P the most because XLK and XLF are number 1 and number 2 in the S&P 500. The top weighted names here, well, this high concentration weighting, well, this is how high concentration weighting it is. Berkshire is about 13.5% weighting. JP Morgan's just over 9%. Visa's almost 8.5%. MasterCard's about 7%. Bank of America's about 4.25%. All right. Those names right there, those top 6, think about all the other stocks in XLF, whether that be Schwab, Goldman, BlackRock, Morgan, American Express, right? They don't at all hold a candle to the weighting of the top 3, 4, 5, 6 names. So where these go, the XLF goes. Now, Where the XLF goes, the lower weighted stocks will likely go because it's the rising tide. And when XLF is bought, right, all of these stocks have to be bought. And if JP Morgan is strong, it influences the XLF because it's just over 9% weighting. So this is the synergy that a futures trader can benefit, and frankly, a stock trader can benefit as well. This is the sector not so secret, right? When I talk about sector secrets, this is it. It's a healthy respect and adherence to the fact that the markets we trade are high concentration weighted, and why not use that to our advantage, right? Okay, so if XLF is moving higher, XLK is moving higher, NAS is moving higher, S&P is moving higher, this sector is moving higher, these stocks are moving higher. So you can see a list already, right? Okay, wait a minute, Rog, if we get a buy the dip in JP Morgan, Visa, MasterCard, Bank of America, Wells, XLF itself, and then we go back and think about the list within the XLK, again, these are things that we can do with high probability. Let me show you another wonky sector. It's not always going to be that clear. Here's the third heaviest weighted sector, the NASDAQ. This is consumer discretionary. Weird grouping because you've got Amazon, and then you've got Tesla, and then you've got Home Depot. Now, these three names are the bulk of the weighting, or the most influential three stocks. This is 24% when we're talking about Amazon. It's about 18.5% with Tesla. It's 4.5% with McDonald's, which actually just is ahead of Home Depot right now. So like I said, not a brand new list of names, but just a little bit of a shuffle up. Home Depot's about 4.25%, McDonald's about 4.5%. But again, 18.5% for Tesla, about 24% for Amazon. So is this sector going to go largely where a quarter of the weighting is? Yeah, it's going to go pretty much where Amazon takes it. Now, if Amazon, Tesla, McDonald's, Home Depot, Nike can move together, that's going to help XLY that much more. So what's holding things up? Tesla. Tesla's not in an uptrend. Lowe's is not in an uptrend. Starbucks, TJ Maxx, not in uptrends, right? So this is where, likely because of Amazon, XLY will continue higher. But if I want to look for where the probabilistic movement to the upside is, Amazon, McDonald's, look who's punching up to a higher high here. The stock above the 200, the stock that's double green, right? What else is punching up to a higher high here? Home Depot, the stock above the 200, those white dots, and the stock that's double green. Same thing with Nike. You might say, well, Lowe's is moving higher, right? But the probability that it will continue is lower than stocks that are in uptrends, right? I will say Starbucks could be kind of cool on Monday because if we can get support at the 200, put in a minor low, XLY moves higher. Yeah, those opportunities are there, but the higher probability, more 2020. Like, how do we find 2020 again? This is what I'm showing you. 2020 was great because everything was green, right? From top to bottom. But how do we find glimpses of 2020? This is how we do it. And they're always there. Right? Something's going to see flow. Something's going to benefit from dollars moving into it. And it's our job just to find those double greens, right? Bullish momentum, bullish trend. So if someone says, Rog, would you buy Lowe's? I would not. Rog, would you buy Tesla? I would not. Same with Starbucks, same with TJ Maxx, right? What would you buy? Focus on the green. All right, so then and you can see I'm not choosing a stock doing something. We're painting all of the stocks with the same brush, with the same tools, with the same process. Now, here's XLE. This is what weakness looks like. Now, here's a great example of the boat, Exxon, Chevron, Schlumberger, Hess, looking better than the tide. XLE, the sector. XLE is weak, no question about it. But if I want to set up a short, the flip side of buy the dip is sell the rip. That's Exxon, that's Chevron, that's Schlumberger, that's Hess. Right? You might say, Rog, there's a couple bullish names here too. Sure, if you're looking at, hey, Rog, how do I get into XLE? You know, I don't believe it's going to keep seeing lower lows. If that's the hypothesis you have, don't buy XLE necessarily. And certainly don't try to pick a bottom in Exxon. Buy a dip in PSX. Buy a dip in Williams, WMB. right? Find the bullish corner of this overall group. I think a lot of times traders want to short PSX and they want to buy Exxon, right? Flip that around and you're going to find a lot more probability in that approach. Yeah. So this might seem like, hey, Rog, we're talking a lot about stocks and sectors. Gang, that is what the indices are. And XLE's weakness is a big part of why on the list of things I want to buy is the Dow there. Yeah, but not superseding NASDAQ and S&P. But let's talk about the Dow. What can we do with the Dow? Dow is financials, tech, and healthcare. If I already like financials and I already like tech, we could certainly buy the Dow, but things like XLV and XLE might hold it back a little bit, right? But I don't have a problem with buying the dip in the YM or the DIA. But let's remember that XLF, right, our financials, this is the number one weighted sector in the Dow. This looks better than the Dow. Not by a whole heck of a lot, but it looks better than the Dow. And the S&P is going to benefit from XLF as well. So here's a situation where you might say, Rog, there's a lot of choice. There sure is. It depends on how broadly you want to go with your bet. In other words, if you want to play Dow, you're making a bet on financials and tech and healthcare and energy, transports, industrials. Yes? If you're making a bet on just tech and financials, a more concentrated, clearly bullish group of sectors, S&P is the way to go. If you want to leave financials out of it and just say, look, I want to buy tech, Magnificent 6, not so much 7, right? This is the way to go. Go into NQ or buy the relative outperforming individual stocks within the NASDAQ. And so this is how we build watch lists, and this is how we buy relative performers. We compare. It's a comparative performance. What's better than something else? Kind of like eat this, not that. Remember those books? Well, this is trade this, not that. And we should be able to look at all these symbols and say, wow, this is a cool setup. I really like this stock, but this other stock is behaving in a way that suggests a higher probability follow through. And remember, gang, it's not fills alone that pay us. It's fills plus follow through. This is the game plan for December. This is how we're going to go about it. I'd rather be bullish going into December. We'll talk about maybe some bearish corners of the market, regional banks, healthcare, perhaps energy. Next week, we're going into earnings prep as well, gang. So stick around. Next week, I'm going to start giving y'all a little bit of insight in how we prepare for earnings starting the first week of December. All right. So as always, gang, thank you so much for being a part of the Simpler community. Thank you so much for your time as always. Very optimistic about December and very optimistic about 2024. We are seeing the most dovish reads on the Fed Fund futures that we have seen in quite some time. So be sure to join me for the Top Tier Outlook show on Sunday at 6 p.m. at the Simpler Trading YouTube channel, as well as my YouTube channel at Roggy Horner. All right, gang, be good to each other. Thanks as always for smashing that like button. Leave your comments and questions below. I always check them and answer them personally. All right.